Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. This is Aaron Edwards with Santos Springs. It is July 29th, 2025. We're wrapping up the month of July. Pictures I've seen of crops look great. We'll get into that in a minute. First, we always want to start with the recommendations. So, bias towards action. Let's look at the recommendations and go from there. Get the screen shared up here. Really just taking care of work on that. We sold, we had short soybeans against that SEP contract in June, and we were waiting for a basis to improve. So all we're doing right now is the bean market's come down, the basis has gone up, and we're just kind of clipping away at those positions. So again, let me click the box. There we go. Bam, exit hedge and sell cash soybeans on 20% of the Q3 volume. So Q3 beans, we've already moved this with this 20%. You should be 70% done with that strategy. We put in our hedges, I believe all of them in June, and then we got out of 30% 2 weeks ago, 20% last week, another 20% this week. That should put us at 70%. We still have 30% to go. I will stop sharing that screen. Now let's jump into, first of all, crop progress, then a little bit of market analysis, and then I'll be back on this screen to sum it all up and at the end. Okay, so crop progress. I'm gonna go, let me get a marker real quick. Let's see what color works well for us. Let's go with green. There we go, pull this to the bottom. Corn silking. These are, I kind of covered that up. Let me see if I can do a better job. Corn silking. The 5-year average would be 77% for this week. We're at 76%, right on pace. Good news there. Pictures and firsthand accounts, and also a little bit earlier in July, I was in the southern part of the Corn Belt. It all looks really good. If you have a different story, I'd love to hear it, because I'm kind of unanimously hearing crops are decent, good, or great. And then as far as conditions go, just to kind of add to that narrative, we'll get this in blue. If we add good and great from this year, 53 plus 20, we're looking at 73% of the crop is good to great, compared to historically previous year was 52 plus 16. What's that? 58, 68. So we're a little ahead of last year as far as conditions that are good to great. Shift gears and talk a little bit about bean.
conditions. So soybeans are blooming right at last year, same as last year as from a percentage standpoint. 76% are blooming last year, or the historic average is 76%. And then on the conditions, now we'll compare it to last year. Let me get the marker pulled up here. Good this year is 55. Excellent is 15. Then we're looking at 70% if you add them both compared to last year, which is 54 plus 13. We're looking at 67%. So about 3 percentage points better on soybeans than last year from good to great, good to excellent conditions. And on corn is about 5 percentage points better compared to last year, good to excellent ratings. And that brings us to our pyramid philosophy, is that grain marketing is specific to each operation. So we start by laying the groundwork of a portfolio, of a plan for the whole year. Based on that, we look at, which is the next part of what we're going to go through, seasonals, funds, technicals, and that gives us our action on what we need to be implementing and executing. So without further ado, let's go look at kind of those big picture items there on the market, and we'll start with corn. Share the screen here, get a marker pulled up. Green, there we go. So the good news, if we want to, kind of grasping for straws, but we will say it's good news. If we look, was it 1, 2, 3 weeks ago, we stopped getting speculators selling more. So they're still at a sold position. They're still at a very large sold position. Speculators on corn are still oversold. But over the last, this is the third week in a row that we've seen them gradually reduce their sold position. So kind of oversold, and now they're taking small steps back. I wouldn't read too much into that, but it's at least not worse, right? It's not necessarily good news, but it's not bad news. They're kind of stepping back from being super bearish corn, at least for the time being. It's also important to remember that speculators, they're trying to kind of get one up on the market. Where is the market going? And when the crop looks as good as it does and the headlines are as bearish as they are, the question is kind of how much worse can it get from a pricing standpoint? Or, what's going to be the next headline to break? Well, monster crop. Okay, we're expecting that. So is it going to be even bigger than what's expected? Maybe. But if prices are lower, is demand going to stay where we expect, or is demand going to improve? So that's kind of all of what's going on. I did want to show the basis chart. This is a time of year where basis kind of plays a key factor. I'm going to put this in red. We've wrapped up, as of last week, the recommendations to, old crop that was still in the bin, new crop. We wanted to make sure we moved that, or at least locked in the basis on that. We wrapped up those recommendations last week. And the reason is because in this area, or if you look historic averages in this area, you might still get some opportunities. But from a calendar standpoint, moving forward, let's just look at the blue line, the historic averages. Moving forward, you get this, and then in a few months, we'll be back on new crop, you get this. Basically, sometime over the next few weeks, we're going to switch from this old crop, potentially highest basis level, to the harvest lows. And that transition sometimes happens apparently overnight. A lot of times it happens pretty quick. So it's kind of a game of chicken when you're dealing with basis. If you have old crop in the bin, or you're looking to lock in some basis on new crop, it's kind of an old game of chicken, where you go from the best possible basis, but if you play that too long, boom, you run into new crop basis. if you're talking about old crop, you stored your crop for an entire year to sell at week basis levels the next fall. So in corn, that game of chicken, we kind of, we'll play it through July. August, it gets kind of scary from a historical standpoint. And we're kind of seeing that so far. Like I said, this is the example I use as the basis tool. It's very similar in other ones. So far on this year, the last 3 weeks, which is right when we have been locking in basis, aside from previous cash sales and whatnot, that has so far basically been the high, right? Not much to write home about, but it's looking like it's going to start getting weaker, and it probably will get weaker. And if it's anything like this last year, it was way down here. So anyhow, that's a game of chicken. And if you still have some old crop corn or basis isn't locked in, I would just make sure that you don't have, actual corn bushels without some level of a floor, either a cash sale or a basis contract. We got to get rid of that. It's a dangerous game of chicken. That price is just going to fall out the bottom of it, and you stored it for a year to not be in a good position. We're going to talk about the same thing in the bean market in just a little bit. But first of all, let's look at this is the new crop corn. And man, what a disheartening year. There are not too many years farming where the chart of the first 6 months will look like it did this year, unless we're in a new normal or a new era for some reason. But we get a January rally, we put in a February high, and then basically, if we go from that high, I'm going to see if I can draw a line here that makes some sense to this. But we go from here down to there. Let's see if that didn't look quite right. Let's try to do this again. Let's go from here. See if it's basically just straight down. I mean, what a bleak market. And this is incredibly unusual from a calendar standpoint. It's unusual to not get a spring rally. It's unusual to not have spring stability. This sell-off isn't particularly unusual. Selling off into July and August is not particularly unusual. The fact that it was basically straight down from February to late June, or that was definitely the trend, that is very unusual, disheartening, but markets have a way of keeping us humble, keeping us on our toes, and we have to make the most of it with what we have. We have to react to the situations, and the opportunities that we have had basically in July are basis opportunities. So that's what we're taking advantage of. And hopefully you'll have extra bushels. Hopefully markets will turn around. I would say on a more positive note, now we're not sharing the screen, but on a more positive note, in my mind, and this just to let you know a little bit about how I think about markets, I'm basically at a point where it's saying, okay, market threw a fit, it's throwing a fit, it's selling off. When is the buying opportunity on this market? And thinking about buying, we have, futures to lock in on basis contracts. We've got, potentially if we want to, re-own some bushels or have some long exposure into the future, when should we be buying this market? And this will come out maybe a little bit more clearly when we get into the summary at the end. But the way I think about it is, are speculators done selling? Well, maybe the last 3 weeks have kind of stopped. So if they're not going to keep selling, that significantly limits downside pressure. From a technical standpoint, have we spent too much time under $4? And truth be told, every time we get under $4, and maybe this is even more of a fundamental thing than a technical thing, but under those price levels, we've kind of found buyers. Demand has picked up. So how low can this market go? Can it go lower? Yes. But if we're going to find demand under $4, how much lower is it going to go? And then from a calendar standpoint, July, August, was it a July low? We haven't taken out the low from July. Maybe it is a July low. Maybe we're going to look back and that's the low from the year. But what are the chances that we get a runaway rally in August? Very slim. I think any upside, any upside rally, we're going to have basis contracts to lock in. We're going to have farmers selling. There's just too much selling pressure on top of this market, in my opinion, for us to get just a runaway rally over the next 2-3 weeks. I think that's very unlikely. So we can probably drag our feet on buying it. But part of this mentality is if we're saying, can I buy now? Can I buy now? Can I buy now? If you picture the scene from Braveheart where he's like, hold, and then they wait for the right time and they're ready, because building that anticipation, that helps us be proactive when we need to be proactive. So can I buy now? Well, funds stopped selling, so maybe that's moving in the right direction. Can I buy now? Well, we still have a lot of calendar ahead of us. Can I buy now? Let's make sure that we do have those July lows hold. Let's, if we're going to go down and test them, let's do it again. So as we wait, we can get a little bit more consensus and we get a little bit more conviction that it's a little bit more firm buy and hopefully catch it on the right side of the market. So I'm not just kind of looking for symptoms of the market in a nutshell. All right, now we'll shift gears to soybeans. And let me share the screen and we will go from there. Actually, a bit of good news on the soybeans. Blue, there we go. Soybeans actually, last week, speculators went back to a long position. So they've been long. Last week they went short, and then they're right back at being long. Well, 2 weeks ago they went short, and last week they're back at being long. So speculators, they really don't know if they want to be long or short beans. It's kind of, is this a bullish market or a bearish market? If you look at soybeans in the U.S., less acres, good yields, but will we get the China demand? There's been I don't know if you're following it all, but there's been a tariff placed on Brazilian agricultural products of 50%. That's going to be effective on Friday. Customers in Brazil, that's all they can think about and talk about. Although it doesn't necessarily affect corn and soybean exports, because not very much corn and soybean is exported from Brazil to the U.S. But that's front and center on their minds. So the question is, if there's a warmer trade relationship between the U.S. and China, is there a possibility that we get some of that friendly demand on soybeans? So if the demand is a little friendlier for the U.S., a little less acreage, get rid of some of those extra beans, all of a sudden our balance sheet gets tighter. Expectations about soybeans could shift over the next few weeks and months. And that's why speculators are like, well, it's a big crop and there's probably going to be a big crop in Brazil. That would be a sell. But what if the U.S. gets China demand? And what if, we still do need kind of some August rains that aren't there? So maybe it's a buy. So they're going back and forth on that. And this is basis level. I talked on corn about kind of that game of chicken where, you take it to the limit and then overnight or very quickly over 1 or 2 weeks, it goes from old crop to new crop basis, and boom, the highest basis level to the lowest basis level. And that game of chicken is you kind of want to push it to the edge of the cliff, but not over the cliff. So that's why we've been taking bite sizes on that, on the old crop, on the Q3 corn. We've been moving that. We're at 70% as of today's recommendation, 50% as of last week's recommendation. So we're kind of taking it to that limit, trying to take it to the edge of that cliff to get that maximum basis. But you could push bean basis a little bit later into the season, historically speaking, kind of looking for that cherry on top of that last little bit over the next couple weeks. And you need those August rains, but you sure don't want to be in a position to depend on good basis in September when this happens. So it's kind of a game of chicken. Historically speaking, you could push that a little bit more on soybeans than on corn. On corn, you kind of want to be done with that in July. Soybeans, you can kind of push into August. But that's in a nutshell where we're at on the basis. And then I did want to show the soybean. We talked about how the spec funds, you buy a little, you sell a little, you buy a little, you sell a little, and that's how they've been a lot throughout the year. And if you look at a pricing chart, man, is this a boring chart to look at, right? Look at okay, we got the lows. If we want to get something optimistic, let's go from the low of like December through the low. Let me get a straight line. Oh, that didn't work. Let's see if we can get an angle here. This low to that low. And it's just making a straight line. That's all right. We've just basically been range-bound trade is the main point that I wanted to make. I mean, look at how much time has been spent between, say, 10 and 10.50. It's a very boring soybean market. A couple of takeaways. Speculators aren't leaning one way or the other. That's the first thing. The second takeaway, in my opinion, that is very interesting is I think that our natural tendency to think of bear markets is that bear markets are downward moving markets and bull markets are upward moving markets. And there is, obviously, if you're bullish, you think prices are going higher, and if you're bearish, you think prices are going lower. But I think a better way to think of a true bearish market, a market where there is plenty of grain, it looks a lot like this soybean market from 2025. This is kind of what a true bearish market looks like, which means it'll go up until the most, anxious seller is willing to sell, and then it'll fall until the most anxious buyer is willing to buy, and it just goes up and down, and the grain trades hands, and it's just basically sideways. And a lot of times it'll even kind of squeeze until you get a little bit more definition of, either it's going to fall off more or come up more. But a lot of times, if there's just enough grain in the world, we mainly have a sideways and boring market or a range-bound trade market. And markets go up and down enough just for buyers and sellers to just make that inventory trade hands. And I think we're really seeing that in soybeans, and I think that might be a possibility for both soybeans and corn this upcoming year. The expectation is there's going to be a lot of corn, but also farmers, are they going to sell, 350 corn, 320 corn, or are they going to say, yeah, got to give me something close to 4? So how low can it go? But then at the same time, if farmers are selling 450 corn, I think they're probably going to let a lot go. So how high can it go, right? So it's just kind of that kind of boring up and down. This sideways trade where you can't really get a rally and you don't really get a sell-off that we've seen in beans, I think that in many ways that's characteristic of, typically speaking, bearish markets. Less so than just has to be straight down, right? And with that, let me stop sharing this and we'll go back to the summary and wrap it up. Let me get that pulled up. All right, and share the screen. Seasonally, for Chicago, it's neither a buy or a sell for corn. And for soybeans, it's also neither a buy nor a sell. The managed money is oversold on corn. So it would justify buying corn because they're oversold. And the trend on corn is down. Managed money in the soybean market, they're typically technically longer. They are long, but just a little bit. So the indicator would be neutral. They're not overbought, right? They don't have a large speculative bought position. And the trend is also down. We're kind of waiting for some consolidation to get a little bit more excited about, about upside potential in this market. Historically speaking, corn basis is likely approaching the levels where old crop strong basis offers will switch to new crop offers. The same will likely happen in soybeans, but historically, we may have 2 or 3 more weeks of strong old crop basis in soybeans. I would just say that's not an exact science. It's basically once your local buyer knows that they have enough grain to make it to next harvest, boom, the basis evaporates. So it's not an exact, it's not, that's a location by location. Do we have enough? Do we have enough? Yes, we have enough. Okay, cancel the bids. I'll buy old crop as new crop. I'm not really interested anymore. And so as soon as your local market, as soon as those buyers switch, and what's interesting is, as soon as kind of one goes, they fall like dominoes pretty quick, right? So a lot of times it really feels kind of overnight. That it feels like they all get together for coffee and switch basis immediately. But I don't know that it's necessarily like that. It's just buyers and sellers talk on the phone, and when markets change fast on the basis level, from old crop to new crop. Technical considerations. July lows and the July key reversal in the corn market are still holding. If this continues to be the case, there is a possibility we put in the lows for the year in July. That would be great news. I wouldn't hold my breath on it, but that would be great news. Soybeans are in a downward trend. They will likely test previous lows. But speculators do not seem convinced they should aggressively sell soybeans. So sideways trade may be more likely. In a nutshell, that's it. Only questions we had this week were a few customers, just conversations about basis, but that was more specific to their operation, and it was also, I believe it was answered in this video anyway. So we will skip the questions. Let me know if you have any questions and we'll answer those. Hope you have a great week. Honestly, unless you have Q3 beans or unless you're kind of behind on moving some of your corn or locking that in, I enjoy looking at the good crop, enjoy late summer before the hustle and bustle of harvest. I'll be surprised if markets do anything too out of the ordinary over the next couple of weeks, except for basis markets, obviously, which we talked about. So basis might give us some fireworks. Other than that, I expect basically some of this boring sideways or sideways to down trade until we can get a little bit more clarity and a little more consolidation or a headline to get some sparks. Have a great rest of your week.